Hey everyone, welcome back to Corporate Decoder. Today, MOZAYYX Acquisition Corp just filed an 8K appointing a new director, and I am seeing a key detail about their compensation that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is appointing a new director, and how she is getting paid is quite interesting, especially for a shell company. So MOZAYYX Acquisition Corp filed a current report, which is essentially an update on really important company events. The main event here is the appointment of a new director to their board, Emma Rose Bienvenu. This is MOZAYYX Acquisition Corp, a company that typically goes public with the aim of merging with another company, often called a SPAC or Special Purpose Acquisition Company. They are registered here in the United States, and their stock is traded on the New York Stock Exchange. The filing also lays out the different types of securities the company has. They have units which are packages of their ordinary shares and warrants. They also have Class A ordinary shares, which are like regular stocks, and then there are redeemable warrants, which give the holder the right to buy shares at a certain price, in this case $11.5 per share. Now, let's dive into the specifics of this filing. The main item 5.02 covers changes in directors and officers and their pay. The big news is Emma Rose Bienvenu joining the board as an independent director. She is 32 years old, and her background is pretty impressive. She is currently the Chief Operating Officer at Evertas, a company that insures businesses dealing with things like artificial intelligence and crypto. So she has experience in a cutting-edge, albeit volatile, industry. Before that, she held significant roles at Pantera Capital, a firm focused on blockchain investments. She was there from January 2021 to June 2023 and worked her way up to Chief of Staff, showing strong leadership potential. Her experience also spans law, having worked at a big law firm in London, and institutional investing, with stints at major investment groups like CDPQ and PSP Investments. She even worked in the US House of Representatives and has experience in the consulting world with Accenture. The company states that her combined experience in law, finance, and institutional investing makes her a great fit for their board. Right now, her specific roles on any board committees haven't been decided. If they get assigned later, the company will update everyone. It is standard procedure to mention that there are no special deals or family ties that led to her appointment, ensuring transparency. Here's where it gets really interesting, and this is the core of the story for this filing. Ms. Bienvenu will not be paid in cash for her director duties before the company completes its main goal, which is usually merging with another company. Instead, she will get an indirect stake in 25,000 founder shares. These founder shares are typically given to the early backers of the SPAC and can be quite valuable. She receives this through her stake in the company's sponsor, which is called MOZAYYX Acquisition Sponsor LLC. This means her compensation is directly tied to the success of the SPAC finding a business to merge with, and that merger actually happening. So for now, that indirect ownership of founder shares is her compensation. Any other pay or arrangements will be disclosed later. She will also sign the standard agreements that protect directors from lawsuits and go along with the initial public offering terms. These are pretty standard legal protections. MOZAYYX Acquisition Corp. Date the 1st of June 2026 by Binding Sign Seam Benjamin Zucker name, Benjamin Zucker title. Chief Executive Officer and Chief Financial Officer. Scroll the report is signed by Benjamin Zucker, who holds dual roles as Chief Executive Officer and Chief Financial Officer of MOZAYYX Acquisition Corp. Now looking at this appointment, it is a standard move for a SPAC. They need experienced people on their board. What stands out here is the compensation structure. For a SPAC, especially before they find a target company, paying directors in cash can be a drain on their limited funds. So linking her compensation to founder shares makes a lot of sense from the company's perspective. It aligns her incentives directly with the SPAC's primary objective, closing a merger. However, for an individual director, this can mean a long wait for any actual payout, and there is no guarantee of success. If the SPAC doesn't find a suitable company or the merger falls through, those founder shares might end up being worth very little. The risk here is that the SPAC might not be successful in its mission. Many SPACs fail to find a deal, or the deals they do find don't perform well post merger. In my experience, many SPACs go on to see their stock price decline significantly after the initial merger hype fades. The compensation structure for Ms. Bienvenu is a big indicator of the SPAC's current stage. She is essentially betting on the company's future success. Just like the initial investors, the company itself is in the financial services sector, specifically within shell companies, as indicated by its focus on acquisition. The fact she is joining a SPAC whose units are trading around $10 and its stock price is quite stable suggests it is currently in a holding pattern waiting for its acquisition to materialize. The top institutional holders, like Magnetar Financial LLC and Anson Funds Management LP, are large players. but their percentage ownership is currently listed as 0.0%, which is odd for a normal company, but can happen in SPAC structures where initial stakes are structured differently. More likely, this indicates they hold positions that are not large enough to be reported as a significant percentage in this particular snapshot. They are likely investors in the units or warrants. The biggest takeaway from this filing isn't just about adding a director, it is about how they are incentivized. Ms. Bienvenu is essentially compensated with equity that is highly dependent on the SPAC's success in finding and completing a merger. This is a common but high-risk, high-reward scenario for those involved in SPACs. What I am actually looking for is what company MOZAYYX Acquisition Corp decides to merge with, as that will truly determine the value of those founder shares. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.